Welcome back to the portfolio, everyone. And today I'm sharing with you my top 5 esports and video game stocks to look into right now. With everyone having prolonged stays indoors, people need new things to entertain themselves. Video games and mobile apps are just that. So these are 5 companies you should look into that could see increased revenues and increased stock price because of the increased demand for video games and other forms of entertainment. So as always, we're going to jump right into the video and talk about my top 5 picks in this sector. But of course, we start with looking at my portfolio. Currently has a value at $31,642, still down a massive 18.2% or over $6,700 in the red on my portfolio. We're going to jump right into the first pick, but right before we do that, I am going to ask you to please like and subscribe. It really does help my channel grow, and I really do appreciate everyone who does that. So the first pick on this list of top 5 stocks in the esports and video game sector is Activision Blizzard, ticker symbol ATVI. So of course, this stock owns and operates some of the largest video game brands in the world, such as Call of Duty and World of Warcraft. They own numerous other brands, but those are some of the big names. Currently trading at a stock price of $65.83, And of course, when we look at their 1-year chart, we saw that they had a nice slow increase in price. Then of course, like the entire market, they have taken a sharp decline, but once again have increased and have reached a new peak on the 1-year chart. So this is a massive company operating at a $50 billion market cap. They do pay a very tiny 0.62% yield, but of course, we are not buying these companies for the dividend income. This is more of a growth play. But as with all these companies on this list, I'm going to take a quick look at their balance sheet because I believe that is the most important financial statement to look at right now with these companies, because it is very likely that we may see their revenue and other operating income increase during these times, that it is good to also look at their balance sheet to make sure if that doesn't happen, that they are able to weather the storm and have the assets on hand to cover all their liabilities to ensure this company continue to operate. So if we jump right into Activision Blizzard's balance sheet, we see they have total cash on hand close to $5.8 billion. And we scroll down, this is on Yahoo Finance, we can see their total current liabilities is $2.9 billion. So they have a lot of cash on hand. They can overnight pay off all their current liabilities and still be left with a lot of cash. So that means they are in very good position for their short-term debt. Of course, we look at their total assets, close to $20 billion at $19.8 billion. And if we move down to their total liabilities, just around $7 billion. So they have close to 3 times as much their assets compared to their liabilities. So this company's this company's balance sheet is considered very strong in my personal opinion. Of course, you can look into all these companies on your own. This is just very brief introduction to show you some different picks within the video game and esports sector. So this company does pay a tiny dividend. So we're going to jump over to Simply Safe Dividends, where this shows that they have a 0.61% dividend yield. Of course, that very big market cap around $50 billion, and they have the highest dividend safety rating given out at 99. Their dividend growth is very fast at 11% last year. And of course, when you're only getting a 0.61% dividend, the company's payout ratio is less than 20%. It's around 18%. So they do have a lot of room to increase that dividend moving forward. The second pick on our list of top 5 esports and video game stocks is Nvidia, ticker symbol NVDA. Nvidia Corporation is trading at $281.54 a share. On the day, they are up 4.46%. And of course, very similar chart to what we last saw on the previous pick. We saw a nice slowward increase on the 1-year chart. Of course, the entire market saw a sharp decline, but once again, Nvidia has recovered quite nicely and reached the point where it previously was around 2 months ago. Again, a very tiny dividend yield at 0.24%, but a massive market cap at $165 billion. So this company creates and sells graphic processing units that are used in almost every video game and a bunch of different other aspects of the technology sector. So they produce these chips that generates a very high part of their revenue. They are diversified and generate revenue from other income streams, but once again, you have to take a deeper dive into that video, into other videos, in their analysis in their 10 case to really learn where that other revenue is coming from. This is just a top line to give you ideas on what companies you have to do further research in. So if we look onto their balance sheet, again, you can see here that they have another strong balance sheet. They have close to $10.9 billion of cash on hand. And if we move over to their current liabilities, only 1.784 billion in total current liabilities. So they have over 10 billion of cash on hand with less than 2 billion of current liabilities. They can pay off those very securely, and they're going to be great moving forward. They have the cash to support their operations over the next 12 months. And once again, because they pay that tiny dividend, we always check out their Simply Safe dividend safety score, a very safe at 89. Again, very tiny dividend, almost nothing at 0.23%. And they had average growth last year in their dividend at around 5%. They do have a high beta, so this is a volatile stock. But if you want to put some money into the esports and video game sector, this could potentially be a pick for you. Moving over to stock pick number 3 on this list, we have EA Sports trading at a value of $112 a share. And ticker symbol EA, of course, Electronic Arts, they produce video games. They do a lot of the sports video games. And on the 1-year chart, we see very similar to the other 2 picks. All these stocks on this video game list have performed somewhat similar on the 1 year. We've seen nice slowly increase. Then we saw the sharp decline as we saw in the overall market. Once again, with a nice recovery, bringing it back a little bit past where it was around 2 months ago. This is a mid-cap company. It's on this list, trading at $32 billion market cap. They do not pay a dividend. So again, these are growth companies. And if we move over to their balance sheet, once again, a very strong balance sheet for the short term. Total current cash on hand at around 5.4 billion, with only current liabilities at 2.2 billion. So once again, they have a lot of cash to pay off all their liabilities and continue to have a lot of cash to operate their business. Moving over to their total assets, they have close to $9 billion in total assets, with total liabilities just over 3.6 billion. So they do have numerous assets. They have 3 times assets compared to liabilities. So they do have the assets on hand to pay off all their liabilities if need be. So of course, they do have a balance sheet that will survive the next short term and I do believe will continue without going bankrupt. With all this uncertainty in the market, that is something you really have to look at now. Income statements are going to be affected, of course, because if these video game sectors does well, their income is going to go up if people are increased demand in video games because of what's going on. No one knows for sure, but that's just my thought and my thought process when evaluating different sectors right now. For the sectors that we know people are not shopping at and are declining, if they have strong balance sheets, they may be able to weather the storm even if their income statement takes a hit and their cash flow statement takes a hit. So that's why I really want to focus on the balance sheet right here. Of course, if you're making any investment decisions, speak to someone who's qualified, and of course, do some further research. It's very hard to make smart investment decisions just going over these short looks and quick glances at their balance sheets. So I'm going to move on to number 4 stock on this list, and is a stock I cannot pronounce, ZNGA, ticker symbol ZNGA. This is trading at $7.32 a share. Once again, the 1-year charts all look identical, slow, flat, and then some sharp increases, with the very large stock price decrease in the month of March, and it has recovered and reached a new high compared to 2 months ago. This is the smallest cap stock on this list, trading at a $7.18 billion market cap, and does not pay a dividend as well. So ZNGA operates in the mobile sector of video games. So they produce a lot of iOS and Android video game apps. So these are apps that you play on your phone and you bring with you anywhere you go. And that's where they generate a lot of their revenue. They have numerous apps, a bunch of different big name apps out there. And if you want to find out exactly what they own, you can take a quick Google search and you'll find out all the companies and all the apps that this company generates revenue from. Move over to their balance sheet as well. You can see here that they have total current assets of 1.57 billion, and a majority of that is their cash on hand at $1.3 billion. Moving back down, like always, to their current liabilities, they have almost $800 billion in current liabilities, so they do have the cash on hand to pay off this debt, these liabilities, very securely and without worry. Once again, their total assets are around 3.6 billion, with total liabilities in total of $1.685 billion. So again, lots of assets on hand to pay off all their liabilities, and they should be in a strong financial position to continue operating. That was number 4, and the 5th and final stock on this list is actually an ETF. I am a strong believer in ETFs, so I really like to throw them into these lists of my top 5 picks, whether I'm talking about the overall market or per sector. I think they are very nice to be very nice part of people's portfolios. And if you do want to jump into a sector and are scared of picking only one or two stocks within that sector because you don't like trying to time the market or pick the winners, and you really want exposure, buy an ETF. I'm not recommending you do anything, but that's just my perspective on the situation. Low cost ETFs can always be great investments if you do some research and speak to someone who's qualified about your personal investment needs. So of course, this is ticker symbol ESPO. This is VanEck Vectors Video Gaming and Esports ETF, currently trading at $42.35 a share. Market just opened on the day. It is up 2.05%. So this does pay a tiny dividend of yield of 0.2%. Again, almost nothing, but it does pay the dividend out annually. It's not a quarterly payment, it is annual. And the expense ratio on this ETF is 0.55%. So the expense ratio, I would say, is somewhat in the middle. Of course, you can find a lot of broad-based index funds, broad market index funds at very low expense ratios at around 0.10%. But of course, if you want to go into something a little more, I'm not going to say speculative, a little more actively managed, you're going to have to go into a little higher expense ratio at around 0.55% for this one. And as you can see here, on the 1-year chart for this ETF, it mimics all of its underlying holdings that all have a similar 1-year chart where nice slow increase on the 1 year, sharp decrease in March, and then once again has seen almost a full recovery and has been a new high point on the 12-month chart. So to wrap up this video, we're going to jump right back into my portfolio, and the market just opened, and as you see here on the 1 day, we see a nice 1.25% gain to start the day. Portfolio closes out of value at $31,974 for today. And I really want to say thank you for watching. I appreciate all the love and support. Please like and subscribe if you haven't done so already. I'll see you in the next one.